Happy Friday and happy Halloween. This is MyStockScanner Live, your final scan of the week. We'll break down the headlines, spotlight the numbers, and see who passes the three-point playbook. And please do not let it spook you that it's only Hans-Henrik Nielsen with the answers and Jesper Behrens with the questions, as Liam Flavel has the day off. And why we still
Again.
speak again. Why are we still speaking English? Well, the reason for it is that, of course, some of the viewers, some of the members are from English-speaking territories, and therefore we stick to it. I wonder what Liam Flavel is up to. Maybe he's out trick-or-treating. And do you have any idea, Hans-Henrik, what he could dress up as?
No, but it would be scary no matter what, I'm sure.
So it will not be trick, or will not. He will get a lot of treats. Any
Yeah.
treats up your sleeve today, Hans-Henrik?
Nah, I don't know about today, but we gave a little treat to our members yesterday, where we spotted Netcompany, the Danish company, as a good potential buy, and it's already up quite a lot. So I don't know how much about trick there is in it, but a little treat maybe.
It is all about strategy. That's what it is when it comes to the three-point playbook. On today's show, we will look at Norwegian stocks, as the exchange in Oslo had a terrible day yesterday, thanks to especially Kongsberg. We'll also look at Danish stocks, as it is Friday, and that means that we have Friday face-off, where we pit two stocks against one another. That's DSV versus NTG Nordic. We stay in the transport industry for that one. And since we talk Nordic, what kind of dogfight is Novo Nordisk getting into with Pfizer? A fight about Metsera. We'll talk about that. And we will not forget that there was earnings from Apple, Amazon, and Eli Lilly as they came out with numbers yesterday. And even though the three of them sort of shot up, none of them reached a number called number of the day, because that's 39.5%. Where in the world that is relevant, we will tell you at the end of the show. And we start as Danish as it gets. Danske Bank came with earnings this morning. Hans-Henrik, as far as I saw, the analytics has hoped for 5.39 billion kroners. It ended up as 5.5 million kroners. In my world, that's not a lot, but the analytics were happy and the stock shot up.
Well, with earnings, there is, of course, the earnings in themselves, and that is all good. But normally, analysts and investors are looking a bit towards the guidance. What are they saying about the future? Are they having any specific strategic areas that they're developing? What do they think about them? And Danske Bank definitely came out with some very decent numbers. The thing is that when we look at it in our MyStockScanner in the three-point playbook, people sometimes get a bit scared about the quality number, but they should be aware that on banks and some of the insurance companies, the quality score is automatically very low. That is a bit
Why is that, Hans-Henrik?
It's a bit about how the company capital is structured. So, for instance, the banks, they are getting a lot of deposit from customers, but that turns out as a loan, basically, which means it looks in the balance sheet and everything in the company earnings to be very highly leveraged, but they are actually not. The thing is with Danske Bank, it's a good, solid, steady company. There's no doubt about that. I might think it's going a bit to the expensive side right now. I wouldn't buy it right now personally. It doesn't mean it can't go up. It's just that looking at historic pricings on price earnings and so on, right now it's a bit to the expensive side. So I wouldn't personally touch it.
When we look at the numbers, and we are in the three-point playbook right now looking at it, it seems like that the outlooks, even though they're not priced in with the new outlooks, but they're fairly flat. So even though that the numbers are up around 14% for the coming 2 years, it looks super flat. It looks like there's not much to get.
No, if we look into the numbers, what they are expecting, what is called the earnings per share growth, meaning how much, but basically just their earnings, we can see they're expecting a bit of a drop this year and then a tiny growth next year. And that tiny growth is what makes this PE channel go very sideways. we do like the PE channel to go more in a steep upwards channel, because that means more things can go wrong and we still have a good case. If Danske Bank comes out in the next quarter and say some terrible things about estimates for 26, then it will begin to tip down, and our potential will be gone. So I don't like this horizontal PE channel much.
And basically, what if we stay? I'm almost going to say in the airplane language, we want a soft landing if things go bad.
Yes, definitely. And this is all about potential. We have no idea if this is not an indication that it will go in -30 or +14. It's just to make sure we have a larger upside than we have downside, basically.
Well, if we're coming from a steady flight, we're going to, I'm almost going to say, a steady fight. What
Yeah.
kind of dog battle are Novo Nordisk getting themselves into? Pfizer were looking to buy Metsera, and all of a sudden, in the blue corner, we have Novo Nordisk. They opted. I'm almost going to say I'm out of words. Can you explain what happened?
Yeah, well, first of all, it's a company they are bidding for, and Pfizer had put in a bid. Can't even recall if it was 36 or 38 billion, something like that. And then Novo came out and topped that with 48 billion, something like that. I'm not an expert on that company they're bidding on, so there might be some overall strategic considerations here. I hope there is something that I haven't looked into. However, just looking at the graph here, let's just make it a bit less noisy. Some days ago, both in the article yesterday and to our members a couple of days before, we drew this formation here. This is something called a head and shoulder formation. And we said if that bottom line here, what's called the neckline, if that is broken to the downside, then often we see some more movement down. And that is what we are seeing right now. The stock is down, what,
2.5%.
6.5% since a break here.
Yeah.
And we have put a target on around 280, 290. Right now, the trend is in a way that even though the potential merger or purchase of this company is perfect for them, I wouldn't touch it. It seems like the big guys in the market are selling out.
Well, I thought you promised not to be spooky today, but that's spooky enough.
Yeah, if you have Novo stocks,
I was going to say that's a big downturn that you're expecting. I said today 2.5% down right now at this moment in the market, and you wrote an article. Look it up both on social media but also on the platform, and read about it, because you're kind of leaning towards that it could be 280, 290. You're not
and there's no magic in that. It's not because I have some magic crystal ball. This is all based on stats where we can see what has happened 1,000 times before when we see something like this. So it's all based on stats, and we're not trying to predict anything.
Well, I don't know if anybody predicted yesterday how it was going to go when three of the big companies came with numbers in the US. The competitor to Novo, we like to compare them with them. Now it just seems that they're dwarfing them at the moment, Eli Lilly. But they came with numbers before the market yesterday, Amazon and Apple after the market. And if we look at the numbers, it seemed like, people liked what they saw from Eli Lilly. It went up by 3.8% in the market. And then the aftermarket things were, the one took off, Amazon, blew up by 12.6% in aftermarket, I think it was. And then you had Apple that also rose in aftermarket. I think it was 2.6, if I'm not wrong.
Yes. If we look at Apple first, they are a rock solid company. There's no doubt about it. It's a massive company. However, they've had a bit of a struggle in China. I know the iPhone 7 was selling quite well out there, but they are still showing some decline in revenue out there. That is a bit concerning. But let's see, with Trump and Xi and all the trade deals and 12 out of, on a scale of 10 or whatever it was, Trump said the other day, fantastic trade deal, then maybe that opens up a bit for Apple. I'm not sure about that. If we are looking at it, we think that Apple is priced fairly expensively, almost no matter how you how you pull the different lines here. That is not a stock we would go in and buy right now. However, it's a good solid company, but I would like it cheaper.
Can I ask you, Hans Henrik, then,
Yeah.
because when you say a company is super expensive, as you can see on the
Yes.
graph for Apple in the 3-point playbook, is it a stock that you'll hang on to if you had it right now?
Yes. And first of all, the value chart, if there are new viewers in here, the value chart, again, it's not a magic tool. We are basically looking at two numbers. We're looking at earnings per share, called EPS, and we are looking at something called the PE, price earning. And we multiply these two because that gives the price. And then we use the analyst estimates for the future and say, what do they think Apple will make in the future? And then our system comes up with some ideas of, we wonder how much people would be willing to pay for that earning in the future. That is basically the thought process that goes into this. And then we look at, where have investors thought that in the past that Apple were cheap or expensive. And right now, if we compare it to a historical level, it is at a level where people have thought it was very expensive earlier on. I would not sell it right now if I owned it, because it is in a good uptrend. So I would wait for a break of the trend to the downside. But I would not buy it right now as a long-term hold. Definitely not.
So far, when we look to Apple, what about Amazon? Because
Yeah.
the way that it shot up in aftermarket yesterday was, I think that, when you have companies this size shooting up by more than 10%, I don't know what territory we're in, basically.
No, that is absolutely insane. Again, we have talked about them several times, and we have said that Amazon is Amazon and Google, if we should pick two of the big tech companies that we would put our money into for a decade or so. And it's just that they are sitting on so much of the infrastructure. Now, Liam is not here today. He's normally our tech guy. But Amazon is just, they're sitting on so much of the crucial infrastructure. They have their AWS, the cloud service, and that is one of the reasons why it went up so much yesterday, because that grew by, was it 20%? An insane number when you think about the high level they're coming from. If this was a little mom and pop store at some corner, you could say, okay, 20%, what is that? But we are talking about one of the largest companies in the world here growing their cloud service by 20%. That is insane. There is a bit about the cash flow. We saw that with Apple as well, that they are a bit stretched. Some of these companies will probably have to maybe borrow some money, have some company bonds or something like that, simply to get cash flow enough to grow their AI with. But there is something for the future.
What if we look at the graph for them? Because the thing is, we really want to see how it compares to Apple, in that sense, that how does it look on the expensive curve?
Oh, yes, sorry. Amazon is a lot better, and we mentioned that the other day. I think we compared Amazon to Netflix in one of our face-offs a couple of weeks ago. We mentioned before that level, that horizontal PE line, and here you see the opposite. You see an upward sloping PE channel. That is what we like to see, and then we like to see the stock in the lower part of the channel here starting to trend up. Now, the problem with this is this is updated.
We don't have
no, we don't have
market.
that big jump up yesterday. So that is, it will look different today. It will look somewhat more expensive, and I wouldn't buy it today, I think, not on that jump up.
We talked about Apple already. We're gonna scoot over Eli Lilly a little bit quickly here, because we have so many things that we need to go through on the program here today. And one of the things that you wrote about in your morning piece was, of course, the dragon and the eagle going at it. They had a meeting in South Korea, Trump and Xi, and you were kind of looking at sort of that meeting and the results of it, and you kind of came to the conclusion in the market scan that's out from this morning, that basically, well, we don't know what happened.
Well, it's more, I'm more looking at 15, 20 different experts, professors, Nobel Prize winners in
Awards. Yeah, yeah.
economy and so on, looking at what is their take on it. And the entire trade deal with China, many places it's called a trade truce, a ceasefire. And that is a good picture because basically what most analysts say is they're just back to January now. So all of this fuss, all of the trade wars and Liberation Day, and basically Trump found out that is there. Most of the experts' analysis that he found out that China were the stronger because they had the rare earths, and they are not even back to square now because the farmers are still badly hurt. Even though China is going to buy some soybeans now, they are not going to fulfill all their promises. I'm sure they haven't done that in the past. But also, before this trade war, the rare earth was not really a thing. China was not threatening with that. Now they found out how strong of a weapon it is. They can basically cut off the entire manufacturing industry, weapons, EVs, everything in US. That would hurt them, China as well, of course. But the thing is that now in the deal, they have said we'll get back to the rare earth stuff once per year. We'll have to renegotiate. So once per year from now on, they'll get back to Trump and say, oh, we want more, because otherwise rare earth is a thing again.
Yeah. They
So
got the squeeze, let's just say.
yeah, I have listened to 10, 12 different media outlets now, and you need to go out to Fox, Newsmax, OAN, and those right-leaning before you find some experts that say this is a fantastic deal. The rest of them, the ones from the universities, are really established experts. They're saying this is terrible.
Well, so far, you can read more about what Hans Henrik has said here because the market scan that comes out every morning before 9 o'clock in the morning has taken an in-depth look at what really went down in the negotiation at the negotiation table and what it means. It is Friday, and that means, ladies and gents, fasten your seatbelts. We have what we call the Friday face-off. We pit two stocks against one another. And since Liam is out trick-or-treating at the moment, we kind of decided it should be Danish stocks. And I thought that I would do a theme about transport industry, which meant that we took DSV and pitted it against NCG Nordic. Yeah, big time. Any of them worth a closer look when it comes to a buy, Henrik? What would it?
Yeah, well, in our face-off, we mostly, let me just show my screen here. We mostly look at point 1 and point 2 in our playbook, meaning the timing part is not that much of a focus. I could say they're both in a downtrend right now, so they're not an instant buy. DSV, of course, is the bigger one of them. They are the big brother. They have some. Both of them have had a bit of trouble with their earnings. DSV had it. We can see here they had a drop in 23 and 24. Then it leveled out, and in 25 it seems like they're growing a bit, and then 26 it seems to be shooting off. If we're comparing that to NTG here, we can see that the drop in earnings have continued into 2025, and then the expectations is that in 26 that really comes roaring in there. Just overall, DSV is a better quality. They are larger, they are more consolidated, and so on. If we look at the two, let's go back to DSV and look at the pricing here. We can see that they have been going sideways for quite a while here, and that is a good point. That when the PE channel starts to go up, if a stock then goes sideways, then eventually it will basically grow into being good value, into being cheap, because earnings catch up. And what it seems here is we can see there's a small growth here, and then it starts to take off. That means there is some very good potential in here. These are with PE numbers between 22 and 32. And there are potential between 11 and 62% here. That is actually better in NTG. if you look at it here, they are between 26 and 108%. And again, not a prediction, just pure math. The thing I don't like here is that the PE channel is still heading downwards, meaning we have to count on them being right in their estimates, or the analysts being right in their estimates about next year. Whereas in DSV, they already turned it around. They already started growing again. So if I should choose one of these, it would be DSV. However, there could be more speculative traders that say we can get this cheaper, and then we bet on they get this big turnaround and it's going through next year. We hope for a lot of international trade and no new trade wars and all that stuff. So for the more speculative trader, there can be a bigger upside in NTG. I would personally go for DSV because I'm a conservative old guy.
Well, in that sense, you should be dressed up as Warren Buffett almost. But the thing
Yeah,
is for Halloween. But the thing
I'm
is
almost as old.
no, but you always say that it should be as boring to invest in stocks as it is to watch
It
painting
is
dry. So,
exactly.
well, yeah, let's go to a place or a stock that didn't that weren't that boring yesterday. And I'm sorry to say for the Danes who had it, Kongsberg. Uh, well, the ship is sailing here in our little video on screen, but it almost sank yesterday as it brought down the Norwegian Stock Exchange to, I think it was over 2% that it went down, and Kongsberg was down more than 18%. It took down Höegh Autoliners in almost rammed it because it went down by 6.7%. What happened, Hans Henrik?
Well, first of all, there were earnings, but I think the major dip here was also that they came out saying that they are taking their marine part out of. We saw that with ThyssenKrupp, the German. Was it last week or the week
That was a
before?
couple of weeks ago.
Where
Yes,
they had
exactly.
this warship division that were taken out, and people thought that those warships were a lot sexier than all the other old steel conservative things they're doing. So that made ThyssenKrupp take quite a drop. I think there is a bit what we see here that some of the drop here was simply because of that division being taken out, the marine part. But again, a bit disappointing on the earnings and the revenue. So that was definitely a part of it as well. We wrote about it and said here that it looked like an interesting stock, but we never buy into earnings and we never buy stocks straight up in this 200-day moving average.
But the thing is that we had an email at FOMO@MyStockScanner.com, which is the way to write us and ask questions. And of course, I'm almost going to say it's the question we almost get every time that we broadcast. Is it a buy the dip situation?
This is what I would call trying to grab a falling knife, which is never a good idea. People that think they can predict where the bottom is a stock are, sorry, they're naive fools. You can succeed in it, but it's a bit of a chance game. We do like the math. We do like the good statistical edge, and we personally, at least, I can't find an edge in trying to find these dropping knives.
Hans Henrik, 39.5%. Would you ever take a loan that had an interest rate of that?
Oh, I thought it was my drink you were talking about.
It could have been proof, yeah, exactly.
Yeah, no, 39%. I think that is just too steep.
Yeah, that is the number of today, and that's the interest rate currently in Turkey. And if somebody says that I'm discriminating against the guy, I can tell. It was 40.5. They just lowered it by 1%. Go to Argentina and you'll pay 29%. Russia 16.5. Brazil 15%. And then we can go down sort of, US has 4, China 3, the Euro area 2.15, Japan 0.5, Switzerland sip, nothing, silch.
Yeah. I've said this a lot of times, and I know this is I could talk an hour about this, but then you'll have to stop me. The thing is that if you look to US, the dollar is what is called the reserve currency, meaning that is what commodities you trade in. If I should buy oil from you, we would settle it in dollars or gold or copper or whatever. That means there is a constant request to buy dollars, which means they are basically allowed to print all the dollars in the world they want. without their interest rate and inflation skyrocketing. Because the reason why, for instance, the what was it? Was it Turkey? The
Yeah.
high one, 39.5. That is because they've had a lot of inflation. That means that the money is getting worth less. When that happens, people say, if I'm going to loan money out to you, I want a higher interest rate because my money is worth 40% less in a year. So the fact is that US can print billions and billions and billions of dollars without getting that higher inflation, or at least they're used to. Let's see if that is still the case. So they don't have the high inflation, meaning interest rates is not going up. Investors think US is solid. The second US loses their reserve currency status, with the economy they will have interest rates on 15-20%, just like that.
Ooh, a prediction. But it could be a trick or treat, that one. We
It will
don't
not be
know.
from day to day. Let me just say, I'm not saying it will happen just overnight.
I would be worried if that happened, that's for sure. We're at the end of the show today. We ran over a little bit, but there's so many things in the news that we needed to touch on. When we are back on Monday, it's with the 3 Point Playbook portfolio. That means that we open that book, see what has been bought and sold. Right now, the 3 Point Playbook portfolio is sitting on, I'm looking up at my screen here, 32% clear right now. That's before the market opens this morning. So we shall see how it looks on Monday. When we are back also in next week, we're going to have a Tuesday poll, a little bit different one, because we're going to take quotes from Warren Buffett. Because on
Yeah.
Monday, there will be the last time we'll see him on stage at Berkshire's yearly meetings, or the earnings meetings. That happens on Monday. And talking about earnings, well, we have a full lid. We have Palantir on Monday. We have AMD, Shopify, Uber, Costco, Toyota, Novo Nordic, of course, not to forget that, Vestas, a string of Danish companies. It'll be busy next week as well, Hans Henrik.
Yeah, not as bad as this week. This was a killer week, and the Fed meeting and everything. That was a tough week.
Yeah, but you're still not going to cheat us for our weekend wrap that comes out on Sunday. Have any
Oh,
ideas? Do
no,
you want to pitch
absolutely not.
anything? You have
Now
anything
there will
on your
definitely
block?
be some trade war, some China deal in there. There'll be some interest rates. There's some really worrying, scary stuff happening in something really nerdy called the repo area, repo interest rate. So I will nerd a lot about that.
Well, it'll be on Sunday that you can read the weekend wrap that Hans Henrik puts out. Sometimes on Saturdays, keep out on the platform as well. He might give some of the videos that can inspire you to do your tradings better. That's a wrap for Friday's MyStockScanner Live. We made it all through the week. Now make it count. Keep it simple when you do your trading. It's quality, it's upside, and it's timing. And we will see you on Monday at noon. For now, happy investing, happy Halloween, and have a nice weekend. See you guys.
Yeah, bye.
Bye.